Bitcoin is currently retesting two critical levels on the daily chart. The weekly candle has closed bearish and the total market cap is showing strong similarities to the 2021 cycle. In today's video, we are going to be discussing all of this and so much more. Let's jump on in. Bitcoin is currently retesting the leading span A and 50 EMA on the daily chart. A loss of these levels could result in an extended continuation toward the downside. In today's video, we are doing a detailed and comprehensive short-term and macro analysis discussing the recent weekly candle close, the retest of these critical levels, as well as the short-term charts. We'll also be taking a look at the total market cap as we are seeing a very similar scenario as the 2021 breakout. Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you were interested in, join us over on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency with Bitcoin and the relevant economic news. And if you were interested in taking your trading to the next level, join us over in the VIP channel. We have a sale on at the moment. Click the pinned comment in the free channel to find our sale information. The VIP channel has been around for 50 plus months. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to our group chats, our general chat, our trading chart and education chat, our daily video, our help, our trade setup, and our news chat. We have over 700 members. Check that out by clicking the pinned comment, and let's dive on into the video. So as we can see, a whole heap is happening on Bitcoin as we speak. We are retesting the 50 EMA, we are retesting the leading span A of the Ichimoku cloud indicator, and we have seen the price action continue toward the downside on the short term, grinding along that 4-hour downtrending diagonal trend line. In conjunction with all of this, we have seen the total market cap show very similar signs to what we saw in the 2021 breakout, which was a breakout of the prior all-time high, a rally toward the upside, followed by a strong correction before we saw continuations higher. And of course, the altcoin market is showing again similar signs to what we saw in that 2021 cycle. We'll come and do an altcoin video later in the week. But moving over to the short-term price action, with this continued selling pressure, we are expecting Bitcoin to potentially go lower. And as we can see now on the daily chart, a loss of these two levels, these technical levels, could be the firework, could be the spark that ignites that continuation lower. Now, how low will we go? When will the price action reverse? And what the buyers need to do to push the price upwards are things we're going to be discussing in the video today. And as you can see, if we zoom in, we are just retesting these levels as we speak. We haven't lost these levels. The sellers are not going to push the price down immediately as we are at these points of support, but the consequence of losing these levels is something we need to be discussing in the video today. We also have seen the recent weekly close. The weekly close was a bearish close, and we'll discuss that in the video as well today. Moving over to the market data to start off with, we can see on this information here, volume and liquidations haven't been massively high. Volume is only sitting at 118 billion, up 12%. Liquidations only at 149 million. That is up 36%, with the majority of that coming from longs, 119 million coming from longs, and 29 million coming from shorts. So again, as we approach the end of 2024, it is pretty normal that most of retail takes a step back. A lot of our trading is done via bots and algorithms from institutions, which kind of control the price action for the most part on the macro scale Anyway, and what we are seeing here is that volume dry up, is that liquidity dry up, and the market is moving into more of a chop. And what we'll see on the short-term price action is that we are seeing this aggressive chop continue now, which has started on the 20th and has continued all the way through for the last 10 days against, again, this downtrending diagonal trend line and our critical liquidity levels, our demand and supply levels as represented by these gray boxes. Moving over to the DXY not doing too much, really not expecting much from a DXY here over the next few days. The next major event we will see any significant change in direction for the DXY is going to be anything in relation to inflation, CPI, PPI, retail sales, all those kind of events we're watching out for, but mainly we are watching for the next interest rate decision to see if Jerome Powell will go through with a reduction or if they're going to stay a little bit more uncertain and cautious as they alluded they were going to be in the last press conference. So we're watching very closely to see how it goes. From a technical perspective, while we are sitting above this level of resistance, we do expect continuations. And if we do drop below this prior low, that is when we expect corrections back toward the downside. Looking at the S&P 500, really not much happening here. The weekly close was bearish. We saw a very strong rally back up to retest those highs, only then to get rejected. So we are sitting now in what we would call the initiation of a downtrend. This area here is now an area of resistance. So for us to see continuations, of course, this resistance will need to break, but most importantly, we will need to break above our prior high. If we look at the prior price action over the course of the last 2 years, and if you remember back to the channel, we turned bullish on the S&P 500 back in April, May 2023, and we were calling for a target of $6,000 essentially every day, every single video for a year and a half to 2 years. We hit $6,000 and now we are saying we are cautious, we are actually worried about potential corrections here, and for us to see that continuation past 6,000, we need to break these high points. If we take a look, every single high we have developed, every single high along the way, we have come down to either retest as support, okay, or not retest at all. What we are seeing here is, again, a high point established, a failure, okay, to sustain above, and now we are likely going to see a correction into those prior highs to retest as support. So short-term bearish while we remain below our most recent high, macro bullish while we remain above two things, the 50 EMA and our $5,700 region. So worst case scenario, we see a correction into here, okay, then we see a macro continuation upwards. Best case scenario, the aggressive buying volatility continues, we eradicate this seemingly bearish weekly candle, we break back above this immediate support, and we clear our high to continue upwards. Until then, cautiously optimistic, open to potential downside. That is it for the broader market updates, guys. Let's jump into Bitcoin. A quick word from today's video sponsor. If you were interested in getting 15% to 45% off your trading fees for life, sign up to BitGet, BitUnix, or BingX with the exchange links down below. These are my exclusive links. You'll go to support me creating the content and support the channel. And most importantly, you will support yourself. These are exchanges I personally trade on. We'll play a quick ad to show you and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's dive right back into it. Now, I want to start today's video taking a look at the total market cap. Now, the reason I want to take a look at the total market cap is because of two things. Number one, the total market cap and that's basically in the word, the total market cap is a representation of cryptocurrencies, a representation of the cryptocurrency market as a whole. So when we're looking at, is cryptocurrency expecting to go up? Is it expecting to potentially go down? Is it bullish? Is it bearish? We have to take a look at the total market cap. Now, there's two things I want to show you. Number one, from the 2021 cycle, a similar scenario, and number two, just a general broad technical analysis. So I want to take a look at the 2021 breakout. If we look at this 2021 breakout, we can see about 2 to 3 weeks after we broke through that prior all-time high in 2021, we saw a steep correction of around 29%. After that steep correction, we then saw a continuation toward the upside. So I want to show you this because, one, it expresses that it is normal to see these large and seemingly explosive, or should I say bearish corrections in these macro uptrends. The most important thing is that during these corrections, the structural integrity of the trend remains intact. Not every correction is bearish, not every rally is bullish. It is the implications those movements have on the integrity of the macro trend that matters. In this instance, the macro supports we are watching on the current correction have not been broken, and therefore, although this is something to be concerned about, and is something that is actionable, we can act on this in our short-term positioning, in our allocation or our spread of our portfolio. It doesn't have any macro significance at the moment. And the reason being is because what we are seeing, number one, we are seeing something similar to what we have seen historically, which is a largish correction post all-time high breakout. And number two, most importantly, we are sitting above this 2021 all-time high. Only if we drop below that 2021 all-time high would I be concerned. The reason I would be concerned is because this then would be marked as deviation from our range high, and what that would essentially signify, it would signify that the price action was overextended. It attempted to continue higher, but there was too much selling pressure or not enough demand for cryptocurrencies, a broader spectrum, at these prices, at these levels, which resulted in a correction back down. Now, that could result in a move back down to 2.7 trillion. It could even result in a move back down to 2.2 trillion. Either way, it would not be ideal. The best case scenario is that we see a correction to either retest that 2021 high or just come close to it, as we have just seen over here, before we then move back toward the upside. But again, for that to be confirmed, we need to clear these prior highs, and for the downside to be confirmed, we need to deviate below that 2.87 trillion, below that prior low. Something to be concerned about, something to watch, something to put in the back of your mind. But in terms of actionable, this isn't too actionable on the macro scale right now. Moving over to Bitcoin, let's start on the higher time frame. The weekly candle. The weekly candle was a bearish candle. It wasn't a very good candle. Again, for us to see any sort of indication the weekly chart is going to be flipping back upwards, we want to see the price action essentially close a weekly above around that $98,000 region. We'll draw a gray box in over here, around that $98,000 region. Now, if we go down to a shorter time frame, that $98,000 region lines up pretty well with this downtrending diagonal trend line. If we go to the short term, this is our 4-hour downtrend, and we do have that downtrend on the RSI to actually validate both, again, the highs of the retests on the trend, but the overall direction of the momentum. The momentum is decreasing with decreasing price, so we have a confirmed trend over here. There's no deviation, it's a confirmed trend in this price action. So we have that point of confluence across the weekly and that downtrend. So we want to see a weekly close back above this level. If we see a weekly close back above this level, I would be able to confirm that the correction we have seen from 108 downwards has completed. It is over. It is likely that the low that has been established, wherever that may be, after the close above this this $98,000 level was the local low, and we will see a continuation into new highs. So for a weekly candle, again, this isn't actionable information, but the weekly candle was a bearish candle, okay? For us to be bullish on the weekly, for us to see continuations on the weekly, we are watching for a weekly close above 98,000. Until then, the possibility for a correction lower is still on the card. So let's talk about that now. What are the chances Bitcoin goes lower, and what are the warning signs we are watching out for? Well, as we can see right now, Bitcoin, yet again, we'll come to the short-term charts in a moment to, break down the probabilities of these short-term movements. But from a daily perspective, I want to go ahead and just bring these technical levels up. We are retesting two very important levels. Number one, we are retesting the 50 EMA. Okay, the 50 EMA is going to be represented by this red line. You can see this red line over here. Let's go ahead and circle this red line here. Okay, and our leading span A, which is the upper red line of our Ichimoku cloud indicator, we are currently retesting literally both of these points. Now, these points act as dynamic support levels, meaning we could see reversals toward the upside develop from these points. However, a loss of both of these levels could result, and will most likely result, in a continuation into our lower points of support. These lower points of support lay between the prices at $86,000 all the way up to $92,000. So we have a whole bunch of support essentially between $92,000 and $86,000, but we have some more specific levels of demand laying between around $90,000 to $92,000. We have $89,000 to $88,000, and of course we have $86,000 to $87,000. So these particular points of support marked out by our prior sell side liquidity wicks, these large liquidation events that occurred on the downside. These are points of which we watch for reversals, we watch for more liquidations to occur, and again, for liquidations occurring, we see new money flow into the market, which acts as potential reversal points. So if we're looking at particular reversal points, we are watching these points I have just marked out. But in terms of support, this entire area here is one big cluster of support. What does that mean? It means that we are likely going to see some sort of reversal develop within this region. That does mean the downward move we have seen from 108,000 is closer to the bottom than it is to the top point. Okay, this downward move is likely going to be over within the next 2 weeks, I would say, provided our lowest most level of $86,000 is able to sustain. So let's talk about that really quickly, then we'll come talk about the short-term price action and exactly what is happening. If we lose $86,000, and this is a massive risk factor, of course, if we drop below that $86,000, we could see an extended correction toward the downside, potentially into this level at around $70,000. Again, this is a massive gap on the VRPV. If we go back to the short term, we can see right over here, the VRPV significantly drops off as we drop below that $86,000 region. We have some minute supports through here, looking at around, $73,000, $78,000, okay? But for the most part, we enter a low historical resistance range as we drop below 86,000. So the last point of support is sitting at 86,000. We will see mass liquidations if we drop below here. We're talking about $1 billion plus market-wide in liquidations if we see a wick below here. And that could act as a perfect reversal point for Bitcoin. But if it doesn't, if we do not see demand push in at those prices, we could see an extended correction downward for Bitcoin. And that, as a consequence, will result in the total market cap dropping down and will result in a stronger, higher time frame correction, potentially underneath the Ichimoku cloud into that lower level of support. So the downward move is possible, okay? The possible move we are seeing is a move into 86. That is the most likely move, okay? Then we have this lower move from 86 to 72,000. This is a very unlikely move to occur while we remain above 86,000. And what needs to happen for the buyers to take back control will remain the same. This is the beautiful thing about this chart right now, is the validations we need to see for us to be confident the price will reverse are going to be the same at the moment where we are now. It will be the same down over here. It'll be the same this entire way. The validations we look for at the moment are going to be trend, structure, strength. We are watching for the momentum to flip positive on the 4-hour, meaning the RSI is going to have to break this downtrend. We are watching for the price action to close a candle above this downtrending trend line. Those two things we are watching for to have higher confidence the price action is going to see a reversal back to the range high at 99,000. As we've said, we go to 99,000, we are going to be closing that weekly, most likely above that 98k region, marking this as a local bottom before we see a continuation higher. So you can see how all the pieces of the puzzle are falling in, and most importantly, you can see right now how this is a game of patience. It is a game of waiting. As you know, I have been out of the market since around about the 10th or 12th of December. Okay, we saw one more move to 108, and since then we have basically been calling for corrections toward the downside for Bitcoin, and we have slowly but surely seen that price ladder toward the downside. I want to show you a chart from our Telegram that we posted. Very, very interesting stuff. This is going to be what we posted back on the 6th. You can see the 6th of December. We showed you this chart, and this was the 2023 December price action. At the time, probably didn't seem too significant, probably seemed a little bit ambitious, I would say, maybe a little bit bearish at the time. But what we have seen is we have seen the price action, and that was a price action for Bitcoin at the time of which I posted that similar chart. We have seen the price action follow identically. Almost, as identically as we could see for a fractal. So as per what the fractal does suggest, it would suggest that we are closer to the bottom of this move before we see a macro reversal upwards than we are to the top. This would suggest we are going to see a liquidation event occur below the low point of our prior liquidity event. That means our prior liquidity event was sitting at the 90,700. If we were to follow the fractal, we would see a liquidation event occur below that region before we then see a continuation upwards. And again, we are watching for the break of this downtrending trend line. So if you are not trading the downside, if you don't care about trading shorts, the thing you should be waiting for, in my opinion, to be confident we are going to see reversals, is going to be that downtrend break and that RSI trend line break, or a mass liquidation event below our prior liquidity level. A lot of stops are going to be set under this region. A lot of liquidity is sitting within this pocket over here that could be grabbed, that could result in a liquidity cascade if we come and test that region. So be very cautious moving into that price point. And as we can see, the price is consolidating sideways, but it is underneath this downtrend. It does have negative momentum. This is still going to be bearish consolidation. Moving over to the daily one final time. Again, for us to be confident in macro continuations, the downtrend on the RSI will need to break on the daily. This is a representation of that bearish divergence we've had into support over here. The retest on the trend is represented by the retest on the RSI. A break of this point, I will need to see to then say, yes, I am macro bullish again, or should I say, yes, I'm expecting an immediate continuation upwards. And when that occurs, I will then be expecting continuations higher. Thank you for tuning in. Have a fantastic day. Catch you in tomorrow's video. See you then.